Hey, hello investors and future investors. Welcome back to the channel. For today's video, we're going to be going over the best option strategies. Not only am I going to go over the best option strategies, I'm going to show you how you could use these option strategies in order to grow your account and make consistent income. Now, if you're the sort of person that's trying to make some extra income using options trading, or you're just trying to make extra cash to supplement your 9 to 5, then you have stumbled onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. So, my name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be giving you the 5 best option strategies out there. And if you stay to the end, you're going to get a bonus option strategy that I also use in my portfolio to keep getting consistent income. Now, so before we get down and dirty with options, I would like to make an announcement. We are going to be reopening our coaching sessions in a group setting. Now, if you want to get buying alerts and you want to join a group of like-minded people, join the community. The link is going to be the first one in the description below. Now, let's go ahead and get down and dirty with options. Now, for today's video, we're going to start off with the first option strategy. And for that, we're going to be using ticker SOFI. Here we are on SoFi Technologies, and this is number 5 in my top 5 list of best option strategies there is, and I will show you why. With SoFi Technologies, as you can see, it's trading at a decent price of $15.93. So if I have to get SoFi right now and make some money along the way, this is what I would be doing. I would be going to trade SoFi options in order to open up the option chain. Once that's done, I'm going to go to sell, and I'm also going to go to put, and I'm going to choose my expiration date. Now, the expiration date I will be choosing is going to be January 10th. Now, I'm going to go below the current share price. I'm going to choose my strike price. Now, the strike price I will be choosing is going to be the $15 strike price. Now, this is why it's one of my favorite option strategies. I am very bullish on SoFi right now. So I'm going to choose a strike price as close to the share price as I possibly can in order for me to have a higher possibility of getting assigned, because I do not mind owning SoFi in my portfolio. So at the $15 strike price, it's a lot easier for me to get assigned as opposed to me going down further to, let's say, the 14. Now, while I'm waiting for SoFi to retrace back the $15 strike price, I will be picking up some money. So I'm going to be paid to wait for me to get this stock in my portfolio. The amount I will be paid is going to be 0.35 or $35. Each option contract is multiplied by 100 shares. This is my 5th best option strategy, and that's known as the cash secured put. So feel free to use the cash secured put in your portfolio in order for you to get a stock that you actually want to own in your portfolio at a much lower price. And while doing that, you're able to collect some premium. So without further ado, we're going to go ahead and we're going to go into the second option strategy, which is going to be number 4 on my top 5 list. And for that, we're going to be using SoFi once again. So let's go ahead and we're going to go back to SoFi. So here we are on SoFi, and I'm going to demonstrate the number 4 strategy that I would be using in my portfolio in order to continue to make income. So let's go ahead to trade SoFi option once again, but this time we're going to be going to sell, and we're going to be going to call, and we're going to be choosing our strike date. The strike date we're going to be choosing is going to be January 10th once again. Now, this time, as opposed to the previous strategy, which was the cash secured put, we're now going to go ahead and choose our strike price above the current share price, and we will be going with the 17.5 strike price. Now, the 17.5 strike price, I will be paid 0.24 or $24. Once again, each option contract is multiplied by 100 shares. Now, why would I want to choose a 17.5 strike price? Well, I'm glad you asked. This option strategy is known as the covered call option strategy, as you can see right here. Now, in order for you to do the covered call option strategy, you must own 100 shares of a stock, or you must have a controlling interest of 100 shares of a stock. The controlling interest part we will get into later on in this video. So the reason why I chose SoFi is that SoFi is perfect if you're trading with a small account. And not only that, SoFi is a very good stock that I think everyone should have in their portfolio. But again, always do your own due diligence before investing. So the number 4 option strategy that I use in my portfolio is going to be the covered call option strategy. Now, the third best option strategy I use in my portfolio in order to get consistent income is going to be what's known as the wheel option strategy. Now, the wheel option strategy is a combination of two other option strategies, namely the covered call option strategies, which we just went over, and the cash secured put strategy, which we went over to begin this video. Now, let me show you how it works. So once again, here we are on SoFi, and we're going to be doing a cash secured put with a sell and a put and our expiration date. So we're going to be choosing the $15 strike price right here, and we're going to be paid $35 in order to do this strategy. So come expiration date of January 10th, SoFi is now trading at a price of below $15. So now we're gonna, what's called in the option world, we're gonna be assigned on our stock, which means we're now gonna be forced to buy 100 shares of SoFi at the $15 strike price. However, it's not so bad because this option strategy is a win-win option strategy and you could continue making money. So the number one way you make money is getting paid to wait for the stock to reduce in value. So now that you've been assigned on SoFi, now you're going to go ahead and you're going to change your strategy to the covered call option strategy. So now you own 100 shares in your stock, which you got by assignment. So now you're going to go ahead and you're going to do the covered call strategy right here, the 17.5, and you're going to pick up some more money. Okay, now come expiration date of January 10th. If SoFi is trading at any price above the 17.5, then the stock that you just picked up at $15, you will now have to sell that stock at 17.5. So let me show you how I keep making consistent income. In your cash secured put, you made $35. In your covered call option strategy, you made $24. Now you've lost the stock again. But remember, you bought it at $15 and now you're going to be selling it at 17.5. The difference between your 17.5 and the $15 your cost price, that's now going to be $2.50. That is going to be a profit for you. However, remember, the $2.50 is going to be multiplied by 100 shares, giving you $250. So on one stock, your portfolio could grow by $300. In order for you to make even more, which I don't suggest you be greedy, you could always try to increase the amount of contracts that you trade regularly. Now, if you get any value from this video, now would be the perfect time for you to go ahead and like the video, subscribe to the channel, and hit the notification bell to get an alert when I post a video. The analytics has showed me that about 90% of you guys do watch the videos. However, it seems like you guys forget to subscribe to the channel. The best way to support the channel is by subscribing. So let's go to the number 2 of my top 5 best option strategies. And that's going to be, and for that, we're going to be using AMD. So guys, full disclosure, every single stock that I use in my videos, I do have them in my portfolio. Okay, so now we are on AMD. I'm going to demonstrate my second favorite stock in order for me to continue to generate consistent income. So let's go ahead to trade AMD options. And now we're going to go to buy and we're going to go to call. I did tell you guys that each option contract, we always try to make a premium, but this is just a stepping stone strategy that's going to help you, especially if you trade into accounts. So just bear with me. So now we're going to go ahead and we're going to choose our strike date. For our strike date and this strategy, we're going to go all the way out. I highly suggest 1 year out or more. This, however, can be done with any period from 6 months and beyond. So now we're going to go ahead and we're going to choose our strike price. The strike price we will be choosing is going to be below the current share price or going to be in the money. I will be going with the $115 strike price, and now I have to pay $30.60. Once again, I will have to pay $3,060. You're going to multiply the price here by 100 shares, and that's going to give you $3,060. Now, why would I go ahead and do this option strategy? Well, it's quite simple. Firstly, this option strategy is known as a long call or a leaps option contract. A leaps option stands for long-term equity anticipation security. Now, the whole purpose of me buying a leaps option contract is from what I mentioned earlier in this video. I want a controlling interest of 100 shares. By purchasing a leaps option, you do not actually own 100 shares, but you're now able to control 100 shares. So your leaps option mimics you actually owning 100 shares. So the second most popular and the best option strategy in my option portfolio is going to be the leaps option strategy. Now, continuing with the leaps option strategy, I'm going to go with the number 1 option strategy in my portfolio. And guys, don't forget, you have to wait for the bonus option strategy. So the number one best option strategy that has given me the most money to grow my portfolio is what's known as the PMCC, or poor man's covered call. Let me demonstrate. So the whole point of me buying a leaps option strategy, it gives me that controlling interest of 100 shares. So now that I have 100 shares in my portfolio, now I could go ahead and sell covered calls. So let me demonstrate covered call once again, and we're going to be using the same stock, AMD. So let's go ahead to sell and call once again, and we're going to choose a closer expiration date. We're going to stick with the January 10th. Now we're going to go up and we're going to choose our strike price above our current share price. And we're going to be going with the $134 strike price. And that's going to pay us $1.07, which in real terms is going to be $107. So the reason why I love the PMCC is the amount of profitability it brings you. It gives you way more profitability than the other strategies that came before this. And let me show you how. If you were to buy AMD right now, you'd have to pay $124 per share. So your account have to have a minimum of at least $12,400 in it. Now that might be a bit of a stretch if you're trading with a small account. So what the leaps option does is that it allows you to control 100 shares at a much less value. Like I showed previously, you're now able to control 100 shares for $3,060. Now you control 100 shares for that price. Now you're going to go ahead and sell consistent covered calls. Now the covered calls you're selling on that 3,000, you're going to be making $107. So this is the benefit right here. You're now making $107 over your cost of $3,000, as opposed to if you bought this share outright, you'd make $107 still. However, it's going to be $107 over your cost of $12,000. With that $12,000, you could buy multiple contracts. Hence, the number one option strategy in my portfolio that I used to make consistent income is the PMCC, or poor man's covered call. Now, I want to thank you for sticking out to the video for this long as we went over the top 5 best option strategy. Now, I'm going to give you the bonus option strategy. Thus far, since we did these option strategy, it's pretty boring and repetitive, meaning you sell a put, you sell a call, you collect your premium, and you keep doing the same thing over and over again. I like to place some kind of excitement in my portfolio while still making an income. So here is your bonus option strategy. So we're going to go ahead to trade SPY options, and we're going to go to sell and call, and we're going to choose our strike date. Let's go to January 3rd for this one. Good. Now we're going to go ahead and we're going to choose our strike price above the share price. We're going to be going with the 602. Let's go ahead. We're going to select that. Now we're going to jump back over and we're going to go to buy and call, and we're going to choose the strike price right above that, which is going to be the 603, and we're going to have to pay $91. This option strategy right here is known as the call credit spread. But wait, it does not end there. I told you I love doing this option strategy because it makes your portfolio exciting. Now we're going to go ahead, we're going to go to sell, and we're going to go to put, and we're going to maintain the exact same strike date, but this time we're going to be working below the current share price. Now we're going to be going with let's go with the 589, and that's going to be 1.68 we're going to be receiving. Now we're going to go over to buy and put, and now we're going to choose the strike price right below our 589, which is going to be 588, and we're going to have to pay 1.50. As you can see here, voila, this is none other than the Iron Condor. The Iron Condor, I love doing the Iron Condor because of the level of excitement and the amount of strategies that goes into the Iron Condor. So let's continue with the trade. As you can see here, if I do this option strategy, I'm going to be getting 0.43. Let's hit continue and let's hit review order. So the total I will be receiving is going to be 0.48, or let's round it off to $50. The amount of collateral I have to leave is $100. So the Iron Condor is an extremely profitable strategy. It's one of those strategies that works out perfectly for if you're trading with a small account. However, due to its complexity, I would not advise anyone that's new to option trading to get involved in this option strategy. So there you have it. The top 5 best option strategies that could give you consistent income over and over again. Those are going to be your cash secured put, your covered calls, your wheel option strategy, your leaps option strategy, and the number one strategy in my portfolio, my favorite strategy is the PMCC. So there you have it, guys. What do you think about these strategies? Do you use any of these strategies in your portfolio? Let me know in the comments below. And until the next video, keep pushing your investments.